Good morning, traders and investors. It's Wednesday, October 8th. Taking a look at the charts, we have the NASDAQ, well, more or less everything seems to be pushing higher today. We got equities up slightly. We have the dollar up. We have gold and silver up significantly. And we have oil up as well. So there's definitely an influx of money. Now, yesterday we talked about in the evening update, we had a little bit of panic selling yesterday. We saw some panic selling at the opening bell, which the market came down and put this spike low. We had another little bout of panic selling into the close. Now, this is panic selling is just on the short-term basis. It's just the people who are watching the chart so close, those people who will panic over small moves are the ones that spike this. This isn't long-term investors panicking. This is just short-term active traders, more so emotional traders, just zoomed way too much in where they watch every single tick and their heart is pounding. And these are the emotional trades. That's what the 30-minute chart shows us. So we had a little bit of oversold condition. Typically, this means we're going to see the market put in a bounce. The chart pattern, though, if we do look, we've kind of gone from we've gone from a FOMO overbought to an oversold level, and we had a FOMO overbought and a quick pullback. Yesterday, we do have this. You could argue this could be a little bit of a bear flag here on the 30-minute chart. The market might want to reset and have a deeper pullback and see the panic selling spike up a little more, have a bit of a shakeout. So we'll have to see how that unfolds. The fact that everything is moving up, like in terms of the dollar moving up again, if we can see this, the dollar is really starting to pick up. And if we look over at gold, it's up 1.4% this morning, kind of moving and continuing to run higher. And we have silver up 2.35%. So we're in this move here where we could potentially see these continue to keep running. Now, overall, gold is set to open above our target for the PHYS. This was a discretionary trade. We've hit our target. So far, it's trading above it. So at the open, you can do one of two things. You can close the rest of the gold position. This is a bonus trade. I'm not saying close all your precious metals trades. This is just for this extra side trade, just to squeeze a little bit out. We wanted to just catch this move right here. We wanted to just catch, it's going to be somewhere right up into this area this morning. We wanted to get that 15% move. That is a low risk play, meaning low volatility, very low probability, like it has a high probability of winning. And that is the play. That was the bonus trade. So you can do, I know a lot of you want to just put a trailing stop and let price just trail up, and you can do that if you want. Let it keep running. You could pick one of these significant lows. You do have to give it breathing space. So obviously from where it is here, you'd have to give it probably 5% wiggle room so you don't get shaken out. If you start layering it in too close, you might end up getting shaken out. Now, if it starts to really go parabolic and shoot straight up, then you can start locking it in at the previous day's low or two previous day bar low behind it. But that's up to you. We have some pretty big volume in this space. Let's just take a look at a GLD out of curiosity for volume. So volume keeps climbing. This is obviously, you can see how volume's really been heavy and thick, telling us that, hey, everybody's moving to this space. It's the play. It's the crowded play. And that can keep it moving for a while. But it also means we're getting closer to some type of blow-off phase. And we never know when it's going to reverse. So again, the PHYS is a trade. It's hitting a target. I'm actually going to be closing that trade. And I was mentioning how we're rolling into the new discretionary trade I mentioned yesterday and the day before that we're taking on. And I'm doing that. Gold miners are set to open up near the highs from a couple of days ago. So we're going to see definitely miners really muscle their way up. If we take a look over at Bitcoin, it's up 0.8%. So it is having a little bit of a pause after the pullback yesterday. And this is what I didn't like and what I was expecting somewhat with Bitcoin. Now, I do think it's gonna want to go up and hit this $135,000 target as long as the stock market keeps going up. But I'm not a fan of the type of price action, this type of price action here, where it poked up and then it gets slammed down, and it just poked so it broke above this high, creates a wick. Well, if we go to this, we come right across here. You can see the same thing. We just saw a feeding frenzy going in, and then it had a bout of selling. And to me, I feel almost as though this could go into a broadening formation, which I don't like, meaning It can suck you in at a high and then spit you out. And again, these percentage moves are fairly big. Most people don't like to stomach a 13-14% loss. Of course, it could come up here, and for all we know, it could continue to broaden and become more unstable. That's why we did the gold trade, is just because it's a very solid, pardon the pun, investment. High probability of it continuing its trend. None of these shakeouts and fakeouts and reversals. But Bitcoin, from the grand scheme of things, the monthly chart, it is trying to break out. It is trading up near these highs right here. If we just draw this box. So it's trying to eat through that. And if it does pause and build a bull flag, which I mentioned yesterday or the day before, it's going to build a launch pad that should take it right up to 136, 135 to the upside. So now it just needs to build that launch pad, take a breather, because it has had a heck of a nice run. And this is a good thing if it has a sideways or slowly sloping down pause here. Just going to go back to precious metals here. We do have platinum up 2.4% this morning. So again, we talked about this from 2007, how just before the stock market puts in a top, we see the whole precious metals complex really take off. Where platinum takes off, if we take a look at palladium, it's up 4.4%. It is kind of rocketing higher. We've got gold miners rocketing higher. Again, we're in that feeding frenzy zone right now where everything comes to life, and you do get some very big moves right near the end of trends usually. So let's just enjoy this ride. If you're in the precious metal space and miners, this is pretty exciting times, and make sure you do have an exit plan down the road. Right now, I think we still let things just keep rocking, and until we see some different price action, I would continue to like that space, and the miners, everything still looks fairly strong. But do expect a pause or pullback along the way for some of these, for them to take another run up. If we take a look at crude oil, we talked about how it had broken down below these lows here, and how it might want to work itself up into the mid-range of this, where the majority of volume and trading is. It kind of creates this little bear flag, and then it could eventually have that next draft to the downside. So we'll just have to see. Obviously, long-term trends, pretty much all the trend lines and moving averages are sloping down and to the right. So again, these are usually, bounces are usually sold into. Every time we do get a strong bounce and it looks like it's got some legs, it just gets sold back into. So I wouldn't get too excited about oil here. If anything, it's about to run into resistance, and it's just a matter of time before we have another red bar and we see it potentially come down to this critical level 56, 57, and then figure out what it's going to do from there. Last but not least, we do have bonds here. They're trying to figure out what to do. They're trading up a little bit this morning. Obviously, the long-term trend is kind of down. When we zoom out, you look at the big picture, and it's clearly down. At best, it's putting in a stage 1 base. And if we look at it from a short-term standpoint, it does have a series of now higher lows and higher highs. So really, it's kind of right in the middle of this range. If we were to just look at this channel that it's more or less in, it's right in the middle. So again, we got to just let it work itself out. It could very easily have this A, B, C correction, come back down to the lower end, or it could just simply put in this kind of bullish pattern and push back to the upper end. We don't know. When something's in the middle of a channel, and especially when it is in a stage 1 base trading sideways for years, don't get too excited. Don't go picking directions. Just let the bond market figure itself out, and eventually it will become an opportunity. And we just don't want to mess around in all this noise. It is running right up into resistance. If you look at where it is here,